Bitcoin is having fun running with the bulls, and one technician after another are already cheering on for new all-time highs. But playing with bulls is a dangerous game, and I say the danger is greater now than ever. My initial intention for this week was to present my thoughts and strategy on Marathon in relation to Bitcoin, but as Bitcoin has taken another tad unconventional route, I decided to scrap the Marathon piece for now and rather focus on properly getting our heads around Bitcoin. And given the ad hoc nature of this episode, I'll try to keep it short, as each minute of production on this channel takes on average 90 minutes to produce. And yes, do note that nothing in this episode is financial advice. These are my own thoughts and conclusions only. I make mistakes and misjudgments too. And if you appreciate this episode, then please return the favor by hitting the like and subscribe buttons and share this episode with others who may benefit from hearing this too. Let's now straighten out the latest technicals in Bitcoin land. As communicated on the Long Life Trading Twitter, I have temporarily released the entirety of my Marathon position. And to those of you who may not know, I mainly don't deal in Bitcoin itself, but in Marathon Digital Holdings, an American Bitcoin mining company listed on the US Nasdaq. And this I do because it's a practically leveraged version to that of the Bitcoin spot price, just like gold mining companies tend to move exponentially to that of the spot price of gold. Now, amidst this little price rally as of lately, one technician after another seemed to have turned happy-go-lucky bullish again. Personally though, I am anything but optimistic, and by saying so, I do stick my neck out, for if I'm wrong, if Bitcoin were to initiate an immensely strong move up towards new all-time highs, I will look like a fucking idiot. But that's fine, and the reason why that's fine is because my zoomed out analysis still says bearish, and until proven otherwise, succumbing to emotional decisions are a fast lane to trading disaster. First of all, it's rather well established by now that Bitcoin is in the midst of a zigzag. For when dealing with corrections, the old Elliott wave pioneers Frost and Precher put it beyond doubt in their classical book Elliott Wave Principle. They say that, quote, "Corrections are never fives, only motive waves are fives. For this reason, an initial five-wave movement against the larger trend is never the end of a correction, only part of it," end quote. By that token, what we're seeing right now is the B wave of that ABC zigzag, a classical bull trap, one with much more downside to follow. The only problem at the moment is that there are different ways to count that zigzag. Either we're still in the B wave of the B wave, as discussed in detail in the previous episode, or we're in the C wave of the B wave. Practically, this makes no major difference, and in either case, we should expect prices up towards the $45,000 to $50,000 range, or else we've finished our B wave already. Time will tell, for if Bitcoin were to break above this significant level of horizontal resistance, then we should have another bit to go. And we will have the answer in the very moment Bitcoin were to potentially break above the recent local high, the A wave of that prospect C wave out of the B wave. Yeah, tell me about it, I'm confused too. All in all, this means that whether Bitcoin proceeds higher from here or not, it does by no account mean the danger is over. I'd even go as far as to say that the higher this B wave were to go, the more devastating the damage would be upon plunging down once again. One thing that paradoxically makes me feel more certain about my recent Marathon clearance decision is that it made me feel sick to my stomach. For whenever you feel bad, whether when buying or selling, it often means you're onto something. And the reason for that is because it's contrarian to the psychology of the herd. With that said, I again don't rule out the possibility of more stomach pains amidst a potential move towards the $45,000 to $50,000 range. If, however, Bitcoin were to break above the strong horizontal resistance and, more importantly, the recent local top, whilst the normal markets are open, I will join in on that short expected ride, although with the utmost level of caution. Until then, this could have been the top for some time to follow, and this here could very well be the first two waves of the first wave of the C wave. A journey that would have its technical target as low as the previous all-time high of $19,600. That was all for now. Thank you and goodbye.